Hello, Face. How's everyone doing today?
One doubt.
Hope everyone's doing okay. Hi, Ryan. How are you?
Yeah, tired, mate. You?
I wonder if anyone has a whiplash collar I could borrow.
Good morning, Dale.
Hey, Kman, how are you?
Yeah, good, man. I have a teddy bear still.
What were we talking about?
I don't recall, but I know it's worth about $30. That's the only thing I know.
Okay. Anyway, a lot of markets not following through. Yen definitely did. It's still following through. And dollar isn't. And the metals aren't. And of course, we had this new low here in the S&Ps. And, if you are looking for some type of tradable rally, it takes time. It's a process. Topping's a process. Bottoming's a process. Doesn't happen in one day. We'll see if we hold this 3670 level in the next several days. I'm pretty sure that the top is in the yen. I don't think it's in the dollar. I think we'll make another high because look at where the RSI was. Oil,
You think a top's in the dollar, do you?
What's that?
You think a top's in on the yen?
Yeah, because look at how it's acting. And I think it's even breaking away today from what yields are doing. Because the 10 years about to make a new high here, right? Why is the yen? They smell intervention like Kman was talking about, I think. What do you think, Kman?
There was a story out earlier. There was some rumors story out earlier that the Bank of Japan might be looking at acting or sounding off about acting policy, to curb the weak yen. We could say it is a top, but if they stand pat tomorrow, this thing could be, over 135, 136, 137. Could be back on the moon shoot again.
Well, so tomorrow's a BOJ meeting? Okay.
Yeah.
What I think a more likely scenario is maybe we get a failing rally. But you're right. Everything in this environment, everything could happen.
Hey guys, I'm coming in a little bit late, and Ryan, I missed your comments. What's the rumor? I was wondering, wasn't the yen strengthening as a result to the Swiss National Bank's move? And people are probably speculating that the Bank of Japan might move tonight or overnight. Is that what's happening? With the yen right now?
I don't think that people will be tying. He's going to start lumping into yen pairs because of the SMB. But there are rumours going around that the Bank of Japan maybe are looking at doing something.
Tightening because everybody's tightening. Even the Swiss National Bank is tightening. So I would speculate that, if the Swiss National Bank is trying to come off of negative rates, maybe the Bank of Japan might be forced to move too. You got the Fed that's moving, 75 basis points.
Well, there's no doubt that pressure's mounting. Obviously, everyone else. This has just been a very weird week. The SMB, over 11 years, they've been running their policies. Boom, straight out the window. All out the window in one hit. Bang. Are the Bank of Japan likely to do that? I doubt it. They're obviously a much bigger fish than Switzerland. No offense to the chocolate clock makers. But yeah, you've got to wait. What do you do? I'm tempted to buy it. I'm tempted to buy dollar yen, and on the basis of that the Bank of Japan don't do anything.
Oh, I'm with you. I 100% agree with you. I 100% agree with that. It'll be interesting to hear from Kman a little bit later what his thoughts are on. But that was a crazy move by the Swiss National Bank. Anyways, I'm gonna be quiet. I just need to
stick around, man.
Really quick.
Stick around. I want to ask you, your long-term bullish Aussie.
You can ask me all sorts of stuff. But look, I want to let the team
go ahead. Blake.
I want to let the team go ahead.
Oh, well, then you broke.
I miss you, Dale.
Broke the flow, man. Okay, so anyway, Kman, tell me what you think about the last 24 hours.
Yeah, okay. I think you may be right. A part of the yen strengthening could be the SNB, because SNB was like in the punished corner regarding monetary policy for a long time, same as Japan for 2 decades really. But what I also think is today we saw the risk markets collapse a little bit. It was very volatile this morning, by the way, and I think a lot has to do with algos being plugged into risk assets. We saw the S&P collapse to sub 3,700 and dollar yen go down. So part of it might be expectations of the Bank of Japan, as I was saying over the flow show as well. They are really under a lot of stress now, are under a lot of pressure to do something. I think there is a possibility that they do something, but as Ryan was already hinting, there is a big risk that they will still under-deliver. So for the time being, I would still be, especially for what the dollar yen is concerned. I mean, other yen pairs is a different story altogether. But for what the dollar yen is concerned, I'm going to be up for the Bank of Japan. But if it drops 100 points because the Bank of Japan hints at they might be thinking of something, I might counter trade it as well. I don't think the yen is done weakening versus the dollar. I mean, other pairs is again a completely different story, unless of course the oils and commodities start to collapse
oil's down $9-10 already.
Yeah. I mean,
no one wanted to short it here up there.
That has weighed as well on the yen, but there will remain a big difference in central bank activity. So far, my bias remains for selling yen on RIPS, but we have to be careful which currency we do it against.
Okay, so after Euro takes out the major support at 103.40, you guys have any downside targets?
100,001.
Okay, so par is your target. It's more psychological than technical, right?
Yeah, I mean, I've been looking at the reaction again. ECB just came up saying that they want their new fragmentation tool ready for the July meeting, and we had it. It's exactly the one. It's actually the one that I was talking about. If they only do PEP, that means that they do a form of QE while they will start to hike rates, which is going to be counterproductive. But the new tool seems to be hinting at buying peripheral bonds, but offsetting it via sales in other instruments, which I thought was like a relatively logic and better thing to do. But then we had a 25 pips blip in the euro dollar, and we're back down. So I'm still short euro dollar from yesterday.
Right.
But I'm faster scalping because of the volatility in the market. So I will take parts off when it comes off. What I did this morning as well, and then resell rallies and trying to manage the book very actively. So if there's anything counterproductive happening, that I can, the risk is limited all the time.
Hey Ryan, is the options market giving you any clues as to where open interest is building in Euro options or any of the options? Huh?
No, I mean, it's completely dead. You know, this week is unbelievably dead for a week containing so many big central banks. I mean, there is nothing up today. Let's have a look. The biggest option today, if I can find it, I think is about 400 million in dollar CAD, about 400 pips away. It's crazy.
Are they buying 125 puts or 33 calls?
What's that in dollar CAD?
It's you said 400 out of the
127. 127. There's 560 million. I don't know what they are.
Are they? You don't know if they're puts or calls?
I would do if I could. I could look into them, but 560 isn't a lot.
Okay.
There's nothing of note in euro dollar. I think there's 300 million somewhere. Nothing in dollar yen, and I mean nothing. We're not even talking 10, 15 million. Dollar CAD, dollar MEX, dollar yuan. 400, 400, 441, 470. 0 is nothing, which is unusual for a big week.
Yeah. So that's, unprecedented, unusual, first time in 20 years. We're hearing all these things. It's unprecedented how many times I've heard unprecedented in the last 2 months.
The volatility is making it very expensive for options as well.
Yeah.
We were looking at dollar yen options in the flow show. What was Kate? You were saying like 134.50 call for a week in dollar yen is 75 pips.
Yeah. It was 75 pips, and then the overnight is exploding. The vols on the overnight. Of course, we got Bank of Japan, but they were already high before. It's really exploding. For 2 big figures away, you're still paying 45 points or so.
That's unprecedented.
That's ridiculously expensive, especially.
Thanks for adding to the record. They had gold on the ropes. I want to bring Stel in, and then I can tell Blake wants to come in here. So what do you think, Stel? They had gold on the ropes with all that interest rate pressure. Silver didn't make a new low like a lot of markets did. Any view on here, or you were waiting for the Fed?
Yes, I was, and I said they were going to do 50. I clearly got it wrong. They did 75, and the S&P also hiking 50. I mean, that shocked me, to be honest. So my summary is there's no reason whatsoever to turn bullish on stocks, on bonds, or anything. Unfortunately, that takes with it metals as well, because if the conditions are tightening and the risk is getting sold, theoretically, the metals could rally, but most of the time they won't. So I am still sitting on my hands. Yes, I was waiting for the Fed, but I still think there might be another flush lower. And you know what? So far, for how long have I been waiting? It's been the right call. So I'm going to wait some more. And
what would change your mind? Any price levels like back over 22.5 or anything like that?
Maybe. What's going to really change my mind is the Fed. When they tell us that they're changing their view. I don't care where the price is going to be, more or less. I mean, I'm going to look at technicals, but I don't care where it is. I'm just going to get in and buy.
Okay, let me know when they ring the bell.
Yeah. Well, I think we will know for sure. I was considering a 50 yesterday to be the beginning of them turning, but they didn't do it. Clearly didn't, and so we wait. Now, the other thing that happened was the Bank of England hiking 25. They raised their inflation expectations. They now say that inflation is going to peak at around 11%, if I'm not mistaken. So they're going to be forceful in their actions, and they did 25. I mean, that was I just couldn't believe it. Sorry, that was today.
Yeah. So that was this.
That was today, a few hours ago, an hour ago. It's just comical. It really is, and it just shows you how much they're afraid of tightening. Because really, if your mandate is to keep inflation at 2%, and you're already at 8 or 7 or wherever it is, and you forecast 11, what are you doing hiking 25? Really, you should be hiking 100. No joke. That's what you should be doing.
They have an unspoken mandate about trying not to bankrupt national governments by the interest costs that this is raising. For treasuries around the world, just their interest costs with huge deficits has gone up.
You just described every major economy in the world now.
Right. So that's what I mean.
You've got to think they've done the sums though. That was one of the things I thought, that perhaps the Bank of England only went 25 pips. I said off the cuff, thought maybe they've had a word with Sunak, and Sunak doesn't want big hikes to crunch the economy, and he's going to try and counter that with some big tax cuts.
Could do.
Oh, okay. All right. Any comment on the oil? It's an ongoing bull market. Probably one of the most crowded trades still, because it kept going up, even though the S&Ps were under pressure. What do you think of oil in here? Where are we going? All the way back to this base, or are we just going to hold here and then go to where the bulls are talking 150 or so? I'm reading articles about demand isn't as high as they thought it would be. It hasn't even reached the gasoline demand hasn't reached pre-COVID levels.
I still think oil is by the dip mode. Yes, all this tightening is gonna strangle demand eventually, but at the moment, by the dip, and it's been working for quite a while now. And you say it's a crowded trade. I mean, if you look at DSI, if you look at positioning, it's not extreme levels. You know, DSI I think is 60 something, so it's not. It's not everybody's the same way, just like they were, for example, short treasuries. And
have you heard an energy bear out there anywhere?
Yeah, there are people who are bears. Yeah, I mean, you're right.
I don't hear anyone.
The majority is bullish, but yeah, that's a good call. It's I mean, I think oil is going down eventually, but I don't think yet. I really don't.
All right.
All of retail is short, says Mark. I don't know about that, but yeah, it kind of makes sense. You know, retail usually tries to go against big trends, which is really not the way to do it.
No, it isn't. So, except Paul Tudor Jones said all the big money is made at the turns.
Yes.
So that means he was fighting trends, always looking for a turn.
Well, and that means that's why most retail traders fight big breakouts, because they all expecting that one huge win, right? Always.
Yeah.
So
yeah. Okay. So what your impression from yesterday, Blake?
My impression was real simple. We couldn't close above 38.10 in the S&P, and that was a big we've been talking about that level all week. Ryan nailed it earlier this week, and he was like, "I'm going to short the S&P." You know, and as long as it breaks on a break, I think it was what did you say, Ryan? On a break below,
yeah, it was on a break, yeah.
It was like 37, like right here, like a break
37.97,
37.90,
might be 90.
Yeah, we couldn't even close back above the 38.10 level, and because of that, I mean, it's not surprising that we're at new trend lows. But relative strength is divergence. So you got to be a little careful. I mean, if you're on the short side of the market right now, you have to be a little careful. What I was surprised about actually was I was looking at yields, and it was surprising in North America to see, you know, here's the 10-year yields were coming down yesterday. Here's the 30-year. I mean, you know, yields were coming down yesterday. This is actually dark cloud cover. And then, you know, here we are with another, you know, Europe has ripped up yields overnight. So I guess the price action is pretty messy right now. And so because of that, I was like, you know, when I got up this morning, I was like, wow. And I think a lot of that has to do with the Swiss National Bank, their surprise move overnight. That just shows me. And that's why I woke up this morning thinking, hey, you know, is that why the yen is so strong? Because as Kman put it so eloquently, you know, the Swiss National Bank, alongside with their, you know, partner, the Bank of Japan, those two have been sitting with dunce caps in the corner of the classroom for the last decade or two. You know, those are like the two naughty central banks just kind of doing their own thing. And then overnight, Swiss National Bank, yes, I think Charles said it funny, they raised rates 0.5% into negative territory because they're still negative rates. But they did raise rates, which is, you know, it's the first time we've seen that in when's the last time they moved? You guys know this better than me.
2011, but that was to cut them.
Yeah, right. Okay, well, God, it's been that long.
What a great job.
I mean, defending against this.
All you have to do is make no decision.
It's crazy.
Take a little pressure off you.
But you can see that
they've been selling the rallies. You know, well, how much more manipulation do you want? They're in charge of rates, and they'll be smoothing the drop in Euro Swiss and selling the rips higher.
Yeah,
nice job. Get it.
Anyway, the dollar yen, you can see that moved right at the same time. I'm assuming that's when yields moved. So, Dale, you asked me, what do I make of all this? Well, I mean, logic says that, the Fed raising rates is aggressive. I say aggressive, but, more than the market was expecting yesterday. Would get the results that we got today in Europe. And it's hard to say if it was because of the Fed or is because of Swiss National Bank. And then, the market's like, yeah, we should lean on this a little bit. And, to see Bitcoin back at 20K, I mean, Bitcoin's a threat right now. I think it's a real threat. Greg,
I've heard some guys talking about that.
I mean, well, you guys know 20K is like, it's a big deal, right? This is like a big deal. But Greg came in the chat room a little bit ago. Was it the chat room? Yeah, he or something where he's like one of my friends said that Bitcoin just needs to go to zero. So all the younger kids will learn that they can't, buy crypto and, do TikTok their whole life. They got to actually work. I was like, that's funny. But still, I mean, there's definitely wealth destruction going on, and it's happening in the crypto space. And
Gunlich said 10 yesterday.
What's that?
Jeffrey Gunlich said he could see it going to 10K.
I mean, why not? I mean, you can see this, pink line that we've had down here forever, and that's right around 10K. I mean, why can't we go lower than that?
Let's see that pink line.
Yeah, it's right there. It's at 10K. I mean, we've had that there for years. I mean, but why can't we go lower than that? Why can't Bitcoin,
just
go to 7,000?
Yeah.
I'm just saying, and that's a 261%.
Well, the breakdown measures negative.
What's that?
The breakdown of that blue line measures negative something.
Oh, yeah, I don't know.
If you measure that for me,
yeah,
right?
it does. Yeah, but
it's going to be like crude.
But the fact of the matter is, what the Fed is doing is they are slowing down consumer spending, just spending in general, the real estate market. They're using this blunt tool of, raising rates to really try to clamp down on inflationary pressures. They don't want the consumer spending, anymore, because then, it's gonna just kind of not, that's their tool that they're using at their disposal right now to do this. And it's going to be interesting how stocks respond, because yesterday I thought the stock market response was wrong, even though we rallied. I was like, yeah, I don't know about that. And when we got slammed down today, I wasn't so surprised, but I think it was a Swiss National Bank that really kind of teed off the rest of the market. And as far as right now goes, you were going to ask me about the Aussie, and I'll tell you, Dale, the Aussie's holding up really well. And, you look at that, you look at the Kiwi, it's also holding up really well as well in this environment. And, is it because we're in an inflationary environment, or is it, is this like a little precursor to tell us that there is some, risk appetite seeping back into the market? And I'm going with the latter at this point. I do think that the S&P is still at risk of a short covering rally, but it's just going to be just a short covering rally. If we can get any rally back to 4,000, I think in the S&P, I think people are going to sell into it, myself included. So, before on this last move higher, I was looking for 4,300. We came about 100 pips shy of that. I wouldn't be surprised if, we don't get to 4,000. Maybe we only get to 3,900, 3,950 before we roll back over again. But Dale, you've been around a long time. Ryan, Kman, Stel, well, shoot, all of us have been in the markets for north of 20. Ryan's been in the markets for 30. Dale's been in the markets for 964 years. Kman's been around for a few decades. Look, we've all seen some massive short squeezes in the market. I haven't seen anything that's resembled a short squeeze in the market. I mean, have you? Like a good one? healthy one?
No,
I haven't either.
no.
I mean,
No.
you know, a short squeeze in a bear market rally looks something like this. When it gets gnarly,
that one in March was pretty good.
Yeah, this one was pretty good, but I think the jury was still out whether we were in a bear market or not. I mean, you guys, Dale, we know because we've had this pattern drawn out for since, you know, the beginning of this year. So yeah, this was a good squeeze, but short squeezes that look like this that are convincing enough to get everybody in the market, everybody, like, worst is over. We're gonna be up by the end of the year. All that talk, right? That hasn't happened yet, and that's something I
think it could.
Yeah, I mean, that's something.
How about a summer rally starting next week or something like that? You know,
I'm going to remind everybody that it is, and this is a talk we had on the Morning Edge yesterday or the Daily Roundup. I can't remember, one of the two exclusive ForexAnalytix shows. And shoot, I haven't talked much of anything but the S&P right now. But let's not forget that the market opened up here, and we are down 22% roughly on the year in the S&P. When's the last time we closed the year down 22%? I'm asking. Maybe somebody's got a nice little graph and chart for me. Does that happen often? No.
1929.
I don't know. You know, maybe. I mean, I don't know.
You know
Dale,
who's going to know? Our guest, our next guest.
Who's our next guest?
Going to know. Don Mead's a market historian. I'll ask him.
Oh God, that's going to be a great person to ask then, right? Yeah. You know, because I'm gonna venture to guess it doesn't happen that often. You know, by the end of the year, you know, we might be down 12% or maybe down 15% or maybe down, you know, that doesn't mean we can't be down 30 and bounce back 15 either.
Right.
But what I'm saying is we're probably stretched here. What's that?
For the calendar year.
For the calendar year. And there's still 6 months left in the year, right?
Right.
Or 5.5 months.
Yeah.
Sorry, I was just getting a drink of my coffee. So, but the thing is we haven't seen a healthy short squeeze. Now, I didn't hear from Stelios or Kman, but does this look like any, like you guys have seen some pretty nasty short squeezes over in your time, right?
Yeah, a proper short squeeze is the one that convinces a lot of people that it's over. You know, it's going the other way.
That was not convincing. I'm sorry.
No, it wasn't. By the way, every time you say Kman, I hear caveman. I don't know why.
Oh well, you know, I actually think of caveman kind of like a caveman. I'm sorry, caveman. Go ahead.
Still, that's the echo you hear when I'm talking.
The caveman.
I got that. That was the worst dad joke I've heard in a long time. Very good, Kman. Well done.
I think there was a big short squeeze when the US and Japan agreed on the car deal somewhere back in the 90s. There was a big short squeeze. And that led us straight into the LTCM crisis. So short squeezes are a bit dangerous to try and cling on to. But that was the real last one I recall.
But why is there always a short squeeze and a long squeeze?
But bear market rallies.
Those are melt-ups.
Yeah, well, we were in a melt-up for years. But a bear market rally is what Stelios just pointed out. It's convincing enough to people that the bottom's in and we're going to all-time highs. Like what would convince you and the general public? You know, we get a rally from here and we break 4,200 and then we start trading back up towards 4,300. I can almost guarantee you're going to hear from Bloomberg and CNBC and all the financial news outlets. Bottom's in. Now we go to all-time highs. You know, maybe at that point in time, you get a little hesitation from the Fed, and you know, some of the Fed governors start, you know, walking back some hawkish comments, and everybody starts going, "Oh, yeah, here comes the Fed put. Here comes the Fed put. It's coming. We're going up. We're going back to the highs. You know, by year end." And then that's, you know, usually convincing enough to get everybody motivated that the market's turned, and then that's when it usually turns lower again. But we haven't seen anything like that, and it's something that I do expect it to happen, whether it's today or, you know, or this week or, you know, in a month or so. One of the things that that was surprising yesterday is after the move, seeing the bounce back that we saw in the S&P, but the failure to close above 38.10 was a very big clue that the S&P wasn't going to be able to rally. And that was noted in the chat room, not by myself, but like Don, he was in the chat room yesterday saying, hey, you know, we cannot close above 3,800. And that was a really good note. And by the way, if you guys are wondering, this is the ForexAnalytix chat room. And let me just show you really quick. This is the activity just since I've been awake. And that was over just about an hour ago. So just over an hour ago. I was a little late to the party this morning, but you can see right about here, or no, I wasn't there. It's way before that. I was awake, or I just got in front of them somewhere. I have to find it. I said, good morning. Oh, right here. No, somewhere. But anyway, you guys can see this is a very active chat room, probably one of the most active chat rooms in the markets. Now, if you want to learn how to get in the ForexAnalytix chat room, it's $1 for 10 days. Try it out. I just realized that it's time right now, and it's time for your interview, Dale. And okay. I ran a little bit late. Sorry about that.
That's okay.
All right.
So, well, I want to thank you, team.
Yeah.
Blake.
Thanks, team.
Yeah. Thanks, Kman and Ryan and Stel and
thank you,
Blake, giving everyone a rundown of the schizophrenic markets, manic depression, Jimi Hendrix style type of market. Appreciate it. And it's great to have you back in F.A.C.E, Don. Welcome back. Asking you to unmute. Waiting to hear from you.
There we go. Did that work?
Yeah, I got you, Don. Welcome
Great
back to
be
F.A.C.E.
back with you, Dale.
Yeah, so if you want to share your screen, it's the bottom green button, share screen. And I have to surmise, knowing what your biases have been, that you've had a pretty good 6-month period in the market.
You've got that right.
Okay.
Let's
so
see
you
what
see that green button there, Don? And Don, I wanted to ask you, Blake brought it up today. Can you remember the last time the market has been down, say we're down 23% right now? Have there been many years where the market has finished down 23% that you could remember?
You're asking what if in the years where it started down 23 that it finished down 23? Or are you just saying
that it lost? Keep it simple. Market's down 23% on the year.
Oh,
I
just
got an answer. Anthony Kaneka said 1939.
Wow.
Oh, that's a guess. That's a guess. Do you know?
No, okay. I don't.
All right. Well, I have some homework. Blake's giving me homework. So, Don, I'm still waiting to see your screen.
Okay, well, let's see. I pushed the button that said share your screen.
And you picked the screen.
Oh, and so now, okay, now I want to come across and pick that one. And there, does it show the one that says launch meeting, etc.? And then if I go here, do you see where it says
Genius? No, you're not launching meeting. It's on the bottom. The share screen button is at the bottom. If you just bring your cursor down to the bottom of the screen, and you'll see all the icons down there.
What are you seeing on your end?
Your name. That's it on the screen.
You're not
trying to guide you to where the share screen button is. So move your cursor to the bottom of the box.
Well, first of all, let me. Okay, it says share screen, so I click on.
Click it. Yeah.
And then what?
After you share a screen, it'll say, okay. You pick the window like I'm doing. And then after you pick the screen on the right-hand side, it'll say
then I hit the share again. That's
Yeah.
what I hadn't hit was the share button. Do you see it now?
Yeah, you're up there.
Excellent.
Okay.
Dale, do you realize it's been over 7 years since we first spoke? I was just thinking about that a few minutes ago.
Wow.
That was a long time ago.
Yeah. What island are
time
you
flies
on?
when you're having fun, though.
Yeah. Well, it's a process. And I was talking about, how tops and bottoms they take time. And especially when you have central planning involved. So what island do you trade from, Don?
Oh, I'm living in Nevada now.
You left Hawaii, huh?
We left Hawaii, and then we RV'd full time around for about 3 years. That was a lot of fun. Yeah. And then we settled down in Henderson, Nevada.
Oh, okay, near Vegas. Okay. All right. So you can't say aloha anymore then. You have to say.
Well, I still do anyway.
Yeah,
I will until
now you have.
I will.
Now you're in the right state. It's about hold them or fold them. So I know that your main instrument that you were using for the bear market what was SQQQ. I remember when before the split they were like 5 or 6, so they've gone in the pre-split to 13, I believe would have been pre-split.
Yes, that's right.
Yeah, so I mean it's been one heck of a move for the
well, since you're asking, I keep a tracking account on my website, and year to date we are up about 135% for the tracking account. I post every single trade that I take, either selling or buying, into the tracking account. I post it in real time when I do it. I post on Twitter the second I make a trade, so that people can refer back to the website. And then I put that into the portfolio that I'm tracking, and that tracking portfolio is up 135% since December 31, 2021. So yeah, it's a good year.
Okay. All right. So you prepared something for us.
You betcha.
Okay. So
I just launch right into it.
Yeah, go ahead. What's a primary bear look like? We're witnessing.
First of all, do you see on your screen where it has an Albert Einstein quote? Genius is making complex ideas simple.
That's the top right there. Yes.
Yeah, that's on there. Okay. Yeah. Or I like to say, simplicity is genius. But today what I want to do is just simplify this complex market for people so that they can see that markets are basically all alike in many ways. And let's look back at a couple of markets and then look forward at this one. First of all, let's start with the concept of, are we in a bull market or are we in a bear market? By the definition that I like to use, we're absolutely in a primary bear market. This chart is a 25-year chart of the monthly New York Stock Exchange Composite Index. And I'm tracking it down here. That heavy blue line is the 6-month moving average of the NYA, New York Stock Exchange Composite. And then you can see the monthly line charts here. But to make it very simple, when the monthly MACD is declining, we're in a bear market. I mean, it's just that simple. But to give a fuller definition, when the MACD is of the monthly is in a downtrend, that's one indication. When the 6-month moving average of the monthly NYA is declining, that's another indication. When prices below that declining 6-month moving average, that's your third confirmation of a bear market. And you can just look back at the last 25 years. We had the bear market in 2000, to 2002 here. Are you able to see my cursor on the screen?
Yes.
Okay, good. And then here's the bear market of 2007 to 2009. There are a couple of little minor bear markets during this long extended bull market from 2009 to 2021. But we are back into a bear market right here because we are below the declining 6-month moving average of NYA. And you can see here the MACD is clearly confirming that. So once we know what kind of market it is, let's talk about how bear markets, since we know it's a bear market, let's talk about how bear markets typically unfold. And I think the best way is just simply look at a couple of them. Here's the 2000 to 2002 primary bear market on a daily basis. And you can see the pattern. And it's a very clear, identifiable bear market pattern. It unfolded in 5 waves. Here was March of 2000. Here was September of 2000. And that's the point from which it began. We had one leg down, one wave down. I call that the first intermediate term decline of that bear market. Then we had a second wave, which was the advancing stage. So we had an intermediate term advance, wave 2, an intermediate term decline, wave 3, intermediate term advance, wave 4, and then we ended up with the final 5th wave down, taking us to the bottom in 2002. So it's a very clear, identifiable pattern. Now let's take a look at the 2007 to 2008 pattern. Again, we started with the clear back here in 2007, the July top, as you remember, I'm sure, Dale, and then the October top in 2007. And here we go. First wave down. That's the first intermediate term decline. First wave up, wave 2, intermediate term advance. Wave 3, intermediate term decline. Wave 4, intermediate term advance. And 5th and final wave, which was the biggie from the middle of 2007 to the end of 2007 during the banking crisis. So there's your 5 waves. 1, 2, 3, 4, 5. And here it is again, 1, 2, 3, 4, 5. That's a pattern of a primary bear market. Let's take a look at where we are now in 2022. The top of this, or I should say the beginning of this bear market came from January 4th, 2022, right here. Yep. And we are in the first intermediate term decline of this primary bear market. The intermediate term itself has broken into 5 waves, and we've had wave 1, a decline into February, wave 2, an advance into the end of March, wave 3, a decline into middle of May, wave 4, an advance into late May, early June, and now we have begun and are in wave 5. So I see it as just that simple. Now, if we take the most
5 will also be completing. How do you know how far wave 5 could go, or what when 5 means it's ending, right?
Yes.
For now. Okay.
That's
so
the perfect...
you have any wave 5 targets on the downside?
That's the perfect question for me. It's almost like I asked you to ask that question.
Okay.
Because yes, we're going to talk about the way every intermediate term decline ends. They all end the same way. And my last week's weekly article was entitled "A Sleeping Giant Has Awakened," and his name is panic. You know that you're at the end of the intermediate term decline when you have full-blown panic, and we're going to talk about that.
Okay, because the VIX hasn't reflected that.
It certainly has not.
It's been capped at what, 35, 30?
Right.
Yeah.
VIX is not showing any signs of panic yet.
Yeah.
The total put call ratio for CBOE is not showing any signs of panic yet. The equity only put call ratio for CBOE is not showing any panic yet. The NAAIM, National Association of American Mutual Funds, or whatever it is, association survey that shows the commitment level of mutual funds, of hedge funds, is not showing any panic. All of the standard sentiment measures that I use, and I'm going to show them here in a minute, are not showing panic. They will, because every bottom is created by panic, and we
haven't seen GMO orders yet, right?
Right.
You know what GMO is, right?
Well, yeah, remind me.
Get me out.
Oh, right. Yes.
So the retail's still long. Is that true?
Yes.
They really haven't given up?
That's absolutely true. And I'm going to show you some statistics here in a minute. But at any rate, just before we get to that, the most interesting part, in my opinion, of each intermediate term decline is the end of it, because they all end the same way, with the GMO process taking it into panic stage.
Okay.
This was the end of that the first wave down in 2001, that 2001 first intermediate term decline that we were looking at. Here was the end of that first decline in 2001.
Big reversal
and you
day.
see it just went straight down at the end.
Yeah.
And I'm going to show you the statistics for the put call ratios also. Let's see, time on. I want to make sure we have time to do this. Yep, we're good.
We have time.
Oh, okay, good. Here is the end of the intermediate term decline in 2008, how that first decline ended. And you see this drop right here at the end, just the last 10 days of this move, 9 or 10 days, was like 12 or 13 or 14%.
Yeah.
That's how intermediate term declines end. They end with panic. Here's where we are right now, by the way. This chart through yesterday, and of course, you know what it's doing this morning, where we've been down over 500 points on the Dow. So we're heading into this panic zone, and that's why I entitled The Sleeping Giant Awakens. We are just entering the panic zone. But here we are again. Think of this as similar to what we saw here and what we saw here, 2000, 2008, and now here it is in 2022. This is going to end in the same way that those two did. We can quantify that, and I will. With
10% down day at one point or something like that, and it recovers.
Yes.
Or 5%. Is that enough for it to recover down, or it would have to be closer to 10?
I don't know. 5% is good enough for me, I think. But the main thing is, I want to see the put call ratios showing panic. I want to see the mutual fund commitment levels showing panic. I want to see VIX showing panic. When I see all those things, then I know we're near the bottom. We do not have any of that at this point. And I ask the rhetorical question here, why are all these red circles empty? What I'm talking about.
I've been asking that too.
What I'm talking about is, if you look at, I should have shown that chart. I'm not gonna. If you take a look at VIX over a long period of time, you can point out all of the intermediate term bottoms on the long-term chart, going back as far as VIX goes back, because it always spikes up in here into where I've drawn this red circle. It hasn't done that yet. The same is true of the equity only put call ratio. It always spikes up into these areas at intermediate term bottoms. It hasn't done so yet. The red circle is empty. If you look at the total CBOE put call ratio at a bottom, it always, at an intermediate term bottom, it always ends up getting into this panic zone. Here's the red circle in the panic zone. It's empty. It hasn't done so yet. If you take a look at the commitment level of hedge funds, just to make it simple, this is a 10-week average. Do you follow, Dale, the NAAIM mutual fund commitment statistics? Well, no. It's reported stock charts even tracks it for us, so you can find it on stock charts, but it tracks the commitment level of the 25 or 30 biggest hedge funds in the country. Okay. And they report in every week and show what their level is. And this, they can, since they can both buy stocks on margin and they can short stocks at any given time, they can be anywhere from a minus 100, which would be 100% short, to a plus 100, which would be 100% long on margin. And then if you take all of them and you average them together, you get a reading every single week. The current week is showing 50%. The 10-week average of the commitment level of these mutual funds right now is running at 45. Let's see if I can make this bigger. 0.99%, about 46%. Every single bottom in the intermediate term bottom in the market has been accompanied by, as far back as we've got records, a dip in this commitment level below 40%. Some of the lowest reading we had was actually a minus number in 2011 at an intermediate term bottom. It was like -3 or something right down in here. Yeah. But here's each one of these bottoms. And I'm trying to line it up so you can see the date. That's not going to work. But this was back in 2008. Let's see where. Yeah, this chart starts in 2007 and goes to 2022. So this was in 2007, and you can see there were several times when it dipped down here in 2007, but each one of those was at an intermediate term bottom. It took that kind of panic to create the bottom. We had it again in 2011. We had it again in 2015, 2016. We had it again in 2020. This red circle shows us.
Haven't had it yet.
Right. Well, it will show us when red circles there, are making, and that red circle is empty. Yeah. And that's 100% of my key sentiment indicators are far short. Now, on the one hand, we could say, well, that leaves us a long ways from the bottom. Yes and no. We're probably a long ways from the bottom. In terms of points, we have a lot of points to cover to get to hit that bottom, S&P points to drop. But in terms of time, we are very close. You see what's happening this morning. The Dow futures are down 470 right now. We are dropping into that panic zone right now, and it will not take long. That's the good news. The bad news for the bulls is it's going to be awfully.
What are you thinking? 3,000?
I had been thinking 3,400 to 3,500.
Right. But everyone's saying that now. The pre-COVID highs.
Pardon me?
Everyone's saying that now. That's the pre-COVID highs.
Yeah. When I look at these lack of panic numbers, we're only 300 points away from 3,500 now.
Doesn't seem like enough. 300
points going to do it, frankly. It's not going to get these panic numbers to where they need to be to mark a bottom.
Could we have one good bear market rally first, Don?
I think the bear market rally comes immediately following this washout period. I think we're in the washout period right now, and I think it's going to go fast. I think it's. I think by the end of next week, we could easily see markets below 3,500. I really believe that. Okay. And whatever this washout period works out to be, whether it's 3,500, 3,400, or lower yet, it's going to come quickly, and it's underway right now. And then I would look for the much awaited summer rally to actually begin. But it won't begin until everybody's convinced that it can't happen.
Okay.
And that's going to happen, I think, next week.
I tell you what, a man speaking with conviction, and not just because it's an opinion, but that models that he's trusted and used for years have not entered panic mode. So we haven't had a panic with Don's Sentinels. And, I continue to hope that the Sentinels guard you from mistakes and defeat all those bulls that are your enemies until we get this panic low, and maybe we could get back together again, or you could let me know when you're starting to see that. But the audience appreciated you, Don. They're saying great data points, and we've been talking about sentiment, and short-term sentiment has never been more negative. The short term, if you use like a DSI, I've never seen the S&Ps at 7% bulls, but we're there. So
absolutely.
So my trading warrior brother, thank you for joining us today, and
always my pleasure, Dale. I really appreciate your giving me the honor of coming on here and chatting with you.
Great food for thought, and it's hard work, and appreciate your giving spirit to share it and edify our community today.
One last point for viewers. If you log into 7sentinels.com, you'll see a whole lot of articles up here that I wrote all through 2021 talking about the fact that the big one is about to start, and all the signs. But right here where it says limited time trial, I set that to, in honor of this meeting, $1 for a week's trial. If anybody wants to just pay $1 and follow us for a week and see what we do for the heck of it.
Okay, and you could follow Don Richard on Twitter at 7sentinels, just like his website. And Don, thank you so much. Have a great climax. How's that?
Great.
Who's ever wished you at our stage in life? It would probably go into the history books. Let's all have a great climax. Let's go out with a bang.
That's it, Dale.
Not with a whimper. So
yes,
thank you, brother.
With the climax.
Thank you, Don.
Thank you so much, Dale. You take care.
All right, partner. Adios. Okay, everyone, that's a wrap. Remember, don't just count your pips, count your blessings. Cheers to everyone. We'll wrap up the week tomorrow. You could join the team in 15 minutes on the Morning Edge. And don't forget to sign up for the Traders Funding Program. I used to rock. Now I rock and roll, buddy. All right, Hugo. Thank you. See you guys.